Is this it? Are the lows in for gold and for silver? In today's show, we're going to look at a chart of gold. There's one signal that is really positive that you need to know about, but I am still warning not to get too euphoric just yet. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Hi, my name is Daniel Helmy. Welcome to the channel. We're gonna jump right in. It's Friday. You got better things to do than see my ugly face. So, are the lows in for gold? Now, today on Friday in Asian European trading, we see the second day in a row of green candles. Woohoo! That hasn't happened. Well, actually, no, wait, it happened right here. And what happened afterwards? We got another leg down. But one step after another. So, first things first. Yes, we did not make lower intraday lows or daily close lows in the past 2 days, unless something super crazy happens in US trading today. That's positive. If we look at the 4 hour, at the lower time frame, where we need to go to start to figure out structure, we see this does look constructive, right? We're putting in, and this is European trading. By the time you see this, there'll be a couple of candles. But overall, right, what's important is this part right here. We did not make any new lows on the 4 hour. So there is structure building on the smaller time frames. For us as swing traders, really nothing under the hourly chart is interesting. On the daily, it looks good short term. Here's what I do not like about this. Yesterday turned out to be a day that was, and today too, as positive as it could possibly be for gold. Meaning, we had a panic drop, a flash crash of 1,000 points in the Max 7 stocks. I'm sure you heard about it, Apple, Microsoft, in correlation with the Micron numbers that were outstanding. So that brings massive uncertainty and insecurity into the stock market, which is usually good for gold. The dollar went down, positive. Inflation came in, but it came in the absolute perfect way for gold. Meaning, overall, inflation hit the 3-year high in the US, but it came in a little bit lower than Fed expectations, therefore leading to Wall Street saying they might hold off on the rate hikes, which right now consensus is 1 rate hike in 2026. And oil came down, which means, okay, so that's going to support the thesis in the market that they might hold off on the rate hikes or even not do any, supported it even more. And with all this perfect scenario and an oversold gold price hitting the round number of 4,000, which is significant, all we got so far, again, European trading, is a bounce of 2%. After, in a month of June, we declined top to bottom 12.5%, 12.6%. That's a little weak. And that's a sign that we need to pay attention to. Again, it shows us there are no buyers in the gold and silver market right now. I've pointed this out in previous videos. If you missed these videos, hit the subscribe button so you're always on top and ahead of the market. This is a warning sign. We saw this in the past weeks too, which was always one of the reasons why I said we're going to go lower in gold. Now, could this be the low? Yes, it could be. Do I think it's the low? I do not. By the way, quick footnote, if you watched yesterday's video, yesterday I said that I'm going to start bottom fishing with deep buy limits. I did not get filled, right? Just for full transparency. So am I upset about it? No, not really. It's a beautiful day out here in Germany. It's super hot in all of Europe. But the sun is shining. Central Europe, usually cloudy and rainy. So what do I complain? I love it. And I believe I'll get cheaper prices. And maybe I won't. But what we're seeing right now, not my perfect scenario. My perfect scenario would have been we go below 4,000, we get the big undercut, we get the liquidity grab, we get the stop losses triggered and the sell-off and the long intraday tail that I've pointed out before. You see it here with the 2 arrows. This would have been my preferred scenario. So a fast and ugly and nasty push down, but then a fast, quick snap recovery. And that's the low. Now we see a much orderly structure, which we have seen pretty much since April, right? We had this move up, came down, had a civilized rally, bear market rally, came back down, waterfall sell-off after breaking the 200 and the uptrend, which I had predicted here, then ran all the way up to the downtrend, doinked off it, next sell-off, but it's pretty civilized, which shows me this is not, the sentiment is in the toilet, but the panic is not there yet. And maybe it will never come. We have to clearly adjust to the fact that we hit the round number of 4,000 now. That is significant. So a rebound is absolutely normal. How high can the rebound go? Well, that's pretty easy to define. It'll be the downtrend and, surprise, surprise, remember this zone right here that I drew in at 4,215? Okay, got to be a little lower, but let's not be too nerdy about it. Come on. Even me as a German, I'm like, that's getting too anal. All right, here we go. So this would be the rebound target. Depending how fast we get there, we got a double doink resistance here. And that's that. So overall, I look at this chart. At the moment, what do we see? We put in a lower low intraday and on the daily close. Obviously, every correction has to end at some point with a lower low. But if you get a decline like this and you do not have the sentiment anymore, and that's why it was important for me to point out that there are no buyers for you, that usually leads to a longer structure, meaning we might go up, we might go to 4,250. First resistance zone obviously would be 4,110-ish. Completely normal. Then go back down and then see what happens at 4K. So I'm just standing by. I have the limit orders from yesterday in the market. They didn't get filled. I'll leave them there, but that's all I'm going to do. Overall, short term looks like a classical rebound. But the longer time frame signals on the daily and on the weekly show us this is not the end of the downtrend for gold yet. This is the final down move. Make no mistake about it. But this is not the end yet. I wish you a great weekend. Enjoy your time, and we see us on Saturday. If you have nothing better to do, I'm either going to look at silver. No, wait, silver got to wait unless something terrible happens. It's going to be the dividend show. Didn't forget that. So it's going to be the dividend show unless something wild happens in silver, which I don't think it will. Silver, and let me show this to you real quick, and then we're out of here. It's kind of similarly doing the same thing that gold is doing, except it is doing it with the uptrend that has been in place, as you know, if you follow the channel for a long time. That's why it's very important. It goes all the way back to the Trump tariff chaos in April 2025. Man, that's 2020. Look how far this goes back already. It feels like it was like 3 months ago. Time is just flying. So it's fighting with this uptrend, which is clearly important. As you can see, it does not look as good as gold in terms of it did make a new intraday low compared to the day before on Friday in Asian European trading, but not lower than this low. But that reminds me, I told you we got one really positive signal that we need to keep in mind, and this is it. We got a positive RSI divergence, ladies and gentlemen. And I don't know why I haven't seen anybody talk about this yet. Not our problem, because we here at Hot Trades of the Day figured it out and we're ahead of the market. That is really positive. I was hoping to get this after we get the liquidity grab, the undercut sell-off. This is something that we definitely need to keep in mind. Also, good sign that we're reaching the end of this brutal gold and silver correction. That's it. Now, have a great weekend. We see us tomorrow with the dividend show, and then on Monday, silver and the analysis of what's going on there. Bye-bye.